Joining us to talk about the market today, Peter Cecchini is back, Global Chief Market Strategist, Head of Cross-Asset Strategy at Cantor Fitzgerald. Lori Calvasina is here as well, Head of U.S. Equity Strategy at RBC Capital Markets. Welcome to both of you. Mike, though, how would you describe the action leading into the Fed, the trade talks, and everything else going on this week?
Obviously, a little bit of softness. We're holding near the highs. The market was flat before we opened, during the market day, and then pretty much finished that way. But below the surface, I think there's a little bit of maybe a rethink in trying to ask the question of, has the market already kind of figured out and priced in the good stuff that we expect from the Fed, if that's characterized as good stuff? Also, the thing that struck me is some of the profit-taking calls got some traction. You see the software sector down more than 1%. There was a kind of a skeptical article in Barron's. Downgrades of things like Starbucks and PayPal also got traction. So people are a little bit, maybe aware that the market has run and some stocks are looking a little bit hot at these levels. But overall, we're just kind of waiting.
Peter, you guys have been bearish for a few months.
He's not impressed with anything. Earnings, Fed,
earnings haven't been good.
What makes things change and makes you right? Even if you're right that earnings haven't been good, the markets welcome them. So what makes the market change direction?
Yeah, this is not unusual to me whatsoever. I've lived through a number of these cycles. Markets get well overbought and they get well oversold. I think we're in an overbought phase. The overbought phases tend to last a little bit longer than the oversold phases. Market tends to ignore things like earnings and fundamentals. Right now, to me, it's really pricing in a pretty impressive Goldilocks scenario, which I just don't think we're going to get. I mean, I think the Fed has to absolutely deliver a perfect message if we're going to continue to get a rally here. Again, earnings have not been good. I mean,
what's a perfect message?
Well, I think the perfect message would be, well, we're really not all that concerned about growth, but, we're going to cut at least 50 basis points into the end of the year. And I don't think that's the message they're going to deliver because it would be inconsistent.
Laurie, do you think that's the message we're going to hear and what's needed for the market to continue higher from the Fed?
So, our economists have penciled in some insurance cuts this year, and they say that, they kind of lightly penciled in the one in December. I think what's interesting, though, is the more bullish elements of the market, the people who have really been driving us to these new highs are counting on, getting a lot of stimulus, not just this year, but next year. I do worry a little bit that if we sort of get the message of an insurance cut, that's all, folks, for now, markets aren't going to like that.
Mike, if we look at some of the recent decliners, one of which is a good example, Starbucks, that did have great earnings, and yet it's starting to sell off a little bit. Is that a worrying sign?
I think if it continues, I think if it goes beyond just the day of the downgrade and you essentially say it really has priced itself, especially those kind of world-class brand name growth stocks that everybody can sort of find the obvious reasons to love, yes, then you would worry about it being a little bit of a loss of leadership. But we have to see if it continues.